opportunity or risk? Tiger Brokers and Xiaomi? Long-term potential but short-term risk. Developments affecting Tiger Brokers since October 2021. These are what have been happening for Tiger Brokers and Futu, and particularly Tiger Brokers. Short sellers only see worst-case scenario. But do we buy Southeast Asia business with free option for the Tiger Brokers at this current price at around $4? Recently, Chinese authorities mentioned that they will optimize the regulatory structure and all financial activities will require financial licenses. The question to think through is that will China move towards the regulating overseas investment by citizens? This is a big question, but long-term viewers will know that I hold the view that China will legalize overseas investment by its citizens. The next question that we have to think through is whether Tiger Brokers will be able to obtain the necessary license for overseas investment. We do know that in this announcement, Chinese authorities mentioned that they are working hand in hand to collaborate. This is good because China avoids sending mixed signals, which once we have mixed signals, markets are uncertain, and when markets are uncertain, there will be pressure on the downside for Chinese tech and Chinese equities. China is still not as skillful as compared to the West in managing their financial markets, which is why they are still concerned about capital in and outflow if these two avenues are opened up too fast. But like what I mentioned in my past videos, China will remain committed to opening out its financial market. The question is how much and how fast. Ng Tianqi, head of Financial Stability Department of PBOC, mentioned that there are Chinese institutions with China licenses dealing with the provisions of overseas financial products and services. What's worse is that they even breach foreign exchange rules. I doubt Tiger Brokers and Futu breach foreign exchange rules. Wu Tianhua, global CEO of Tiger, even mentioned several times about complying with rules. So did Futu. Tiger Brokers down almost 90% for all-time peak of 38.5 USD. Can Tiger Brokers finally reverse its downtrend? Currently, there isn't any positive catalyst to push and break the downtrend. And with US tech equities currently under pressure due to possible rate hikes, there is still the downside pressure not only from Chinese tech regulations, but as well as the pressure from US tech equities revaluation. Now is that Tiger Brokers have already fallen so much that its Southeast Asia business valuation may help existing shareholders avoid a fiercer down leg as compared to US tech should small and mid-cap US tech break support around this level. Tiger Brokers and its competitors, Futu, are at construed right now, but Tiger Brokers offer a higher potential upside should regulatory conditions in relation to overseas investments swing in favor. No certainty on this though, so it's best to manage one's portfolio via portfolio management approach to manage the risk and the downside. We know that Tiger Brokers in 3Q 2021 already clinched 80 over 1,000 funded accounts. The share price did not jump despite over 600k funded accounts, with Singapore representing over almost 50% of funded accounts. The dual HQ with Singapore as another HQ also did not push Tiger Brokers' share price back up. Yes, the listing risk and personal information protection law may still weigh on Tiger Brokers and Futu, which are listed on US exchange. At the same time, they deal with certain Chinese citizen data trading US listed shares. That's the concern that the market have on top of the overseas investment rule. Coming out is the updates on Xiaomi. As recent as in late December 2021, Xiaomi announced that it will invest over 15 billion USD in R&D. This is to catch up the gap with Apple and Samsung. What's more, Tencent is also reportedly willing to pay 2.7 billion renminbi for Black Shark. Xiaomi has around 46% stake in Black Shark. If this is true, it will net Xiaomi almost 1 billion renminbi of cash. As for Tencent, it's part of their metaverse game plan for them to intend to let Black Shark 2 focus on VR, AR gadgets. The question that we all have to think through is that will this sale of Black Shark by Xiaomi include a collaboration deal between Xiaomi and Tencent in their quest for metaverse in China in the future? But something impacting on Xiaomi share price right now is that Apple made a strong comeback in China market, taking the number one spot in mobile handset sales in October 2021. Oppo, Vivo, Honor continue to battle fiercely with Xiaomi for market share in China. There's a lot of pressure on Xiaomi on the downside. Xiaomi did make a comeback in November 2021, clinching second spot in China with 4.1 million units sold. Know that for Xiaomi to gain market share in China and to lead in the market position in China, Xiaomi has to increase the number of Mi Store, the physical stores. So what they are doing is that they have been increasing the number of Mi stores, both partner-owned and self-owned, to fuel its ambition to take on the number one spot in mobile handset sale in the world and in China. While mobile handset segment is not the engine for exponential growth, it remains an indispensable part of Xiaomi to bring brand awareness to consumers so that they will consider Xiaomi IoT products like TV, wearables like Xiaomi watches, etc. Xiaomi launches Xiaomi Series 12 and sold almost 1.8 billion RMB of Xiaomi Series 12 within 5 minutes. This is higher than the 1.5 billion RMB sale when Xiaomi launched Series 11. This is good news to me. Though Xiaomi retains top spot in India handphone sales in 4Q 2021 with market share of 21%, Realme, a China brand, is quickly gaining market share and gaining market traction in India. Therefore, there might be some additional price pressure on Xiaomi share price as well. We know that India remains an important piece of puzzle that Xiaomi must continue to hold on to. Xiaomi recorded over 9.3 million handset sales in 4Q 2021 in India as compared to 12 million units in the past. A question to think through is that how is Xiaomi doing in terms of its chip supplies? Because Xiaomi, in the quest for top spot in the world, will be tough if it cannot solve its chip shortage problem as it impacts on 3Q 2021 results. And the senior management have continued to mention that this is a pressure that they're going to face. If they cannot resolve their chip supplies issue, it's very difficult for Xiaomi to get number one spot in mobile handset sales. As I repeatedly mentioned in this video, the weakness in price may be explained by Xiaomi's weaker market share in mobile handset. Though Xiaomi retained number 3 spot in mobile handset sales globally, its market share in 4Q 2021 dipped from 16% in 2Q to 13% in 3Q 2021 and now at 12% in 4Q 2021. Apple launched a new phone in October 2021 and with that make an incredible comeback in 4Q 2021 with 22% market share of the entire global market share. And this may be also explaining why Xiaomi current handphone sales have dipped by a few percentage compared to 2Q 2021. Xiaomi recently been asked by India to pay 88 million USD of import tariff. There's also a question to think through is whether has India become less willing and less open to Xiaomi in doing its business because of the potential India-China conflict or tensions going ahead. Xiaomi right now really has to hold onto 17 to 17.5 Hong Kong dollar range to avoid another downleg to 15 Hong Kong dollar. Xiaomi's Internet of Things and Internet Services segment will continue to benefit from Xiaomi global brand and should help to close out the gap in revenue due to the small dip in market share of Xiaomi in 4Q 2021. But we have to watch out for the results in coming quarter. As for Xiaomi's venture into electric vehicle space, its targeted date of mass production will take place in 2024. Near-term impact will be in the form of cost, without any immediate positive catalyst on the share price of Xiaomi. As always, this should not be construed as any investment or trading advice.